Dave Mazza is with us. He's a managing director and head of product at Direxion. Great to have you here, Dave. Let's first talk about the overall picture for stocks. There's not a lot of big Fed speak lined up this week. There's not a lot of big data apart from an inflation print. So what do you see as kind of being the driving force for markets?
I think the tenor this week is going to be driven by the overall macroeconomic influences that have been pushing markets in the last couple of weeks. To your point, not a big data week, not an FOMC week or anything like that. So really, things like the Hong Kong news are going to be putting pressure. These are expected to be some of the most volatile weeks that we've seen in some time, and this picture is not necessarily going to change, really, in my opinion, up until the next FOMC meeting in mid-September.
Now, Dave, at your guys' company, you've got a lot of funds we like to talk about that are leveraged to different industries. They are ways to get leverage on certain types of trades. I mean, where do you see flows or where do you see activity happening right now? Are people running scared after that big 4% drop, or are they coming in and buying the dip with force?
All right, so there's one area that we're seeing interest that doesn't surprise me, and one that we aren't seeing interest that does surprise me.
Okay.
So the first case is gold miners. This has been an area that, of course, has been out of favor for some time. But with the price of gold bullion rallying so hard with the increase in volatility, general uncertainty that's taken over markets, we've seen a lot of interest in our gold miner ETFs, both on the bull and the bear side. The area that we haven't seen interest in yet, which I would expect actually as it's beginning to kind of be impacted on the downside, is the semiconductor space. So that's one that I'm keeping an eye on to see actually if investors begin to dip their toes back into that area to take advantage of some of the weakness that we've seen.
What I think is interesting here also is the consumer part. Is we've got next level of tariffs that are expected to come. We haven't really had a lot of updates since the original tweet, but are you finding that the tariff debate and the conflict with China is directly affecting where investors are going? Are they being that sort of scrutinizing about not getting exposure to either tariff-related names or China-related names?
Well, the China-related names has been an area that actually they've shied away from. So in general, if you're looking at direct China plays or second derivatives of that, where we have seen, beginning to see kind of a trickle in interest is what I'll call cyclical growth sectors. So these that can come to mind are information technology, consumer discretionary. So it's a bit counterintuitive to actually think of these as quality plays, because when you see volatility, most people historically flock to utilities, consumer staples, even real estate, generally because of their higher dividend yield. But if you look at the balance sheets, especially in the staple space and utilities, they've actually taken on a lot of leverage and they don't have the cash flow to support it. In the tech space, that's actually been an area where we have seen companies have very strong balance sheets and strong earnings.
Okay, so Dave, a few other things here because I'm looking through your notes and a couple of specific names that you mentioned I think are interesting. A few rocks of this market have been the companies that just get the money from the swiping of the consumer spend. Visa, MasterCard are a few. You also put Microsoft in that camp as kind of a name that can give you returns even if growth slows down. Kind of walk me through some of the logic on these.
Yeah, so let's talk about these names. They are certainly not out of consensus. If we think about Microsoft, think about Visa, these are names up 25% on the year, even with some of the downturn that we've seen in the markets. But in this market, what we're looking for is, again, companies that have the ability to grow their earnings in a way that might not be as impacted by tariffs or other exogenous events. So Microsoft, for example, excellent earnings coming from the cloud platform. That really the driver there is, again, as companies need to modernize their information technology infrastructure, the hybrid cloud really that Microsoft dominates in is a unique space for that. So their earnings power is really, again, not as impacted potentially as some of these big events that could drag down other areas. Visa and MasterCard, again, we know other services plays as we continue to see movement to the digital side from whether or not you're a company or whether or not you're on the retail side. Again, these are areas that have resilient growth, not just hyper growth, but resilient growth, strong balance sheets, really high return on equities as well. So something that we think investors should keep an eye on.
I like this point, and I want to come back to Microsoft here for a sec, because the second half of earnings season has a lot of cloud names to report. You've kind of got a loaded back half as far as the Salesforce type companies. For Microsoft as the provider of cloud technology, how important is it going to be able to see if the market can sustain some of the valuations on some of these big high growth cloud names? Should we be worried, or are these still up and and still getting big valuations for a reason?
Yeah, well, I think that's a really good point in regards to what we're seeing from the potential for the increase really in valuations. Really, this market's been driven by the multiple. We haven't necessarily multiple expansion, excuse me. We haven't really seen earnings growth be the big driver, except for these particular areas. And so again, that's why we're keeping an eye on areas that have the potential to grow earnings, even if their multiples are stretched. But when investors are actually looking for the strong return on equities and strong balance sheet that these companies can bring, I actually think they're going to continue to see interest.
All right, Dave, really good stuff. Really like the analytical market take. And a smooth operator when there's Skype problems. Viewers couldn't even tell. Dave Mazza, appreciate it. Managing Director and Head of Product at Direxion. Really good stuff.